It's no secret at this point that China's property market bubble is bursting. As it falls, it's tearing the entire Chinese property industry down, the entire sector, and now actually the entire economy as well. Contagion is here. It is really starting to spread. Banks are collapsing, tech companies are dying too, and of course, it all stems from this property market bubble. Now, you probably know this at this point. You've probably seen little bits of news regarding Evergrande or Fantasia or a couple of other developers that have been crashing, but you likely don't know the whole story. You likely don't know how the bubble got so big in the first place, what actually was the trigger that popped it, and that's why we are here today. So where did it all start? Well, it started with the property market boom that started in China more than decades ago. China was obviously a communist party, but it transitioned over to state-influenced capitalism slowly at first, but then all of a sudden. The reason they did this was very simple. China wanted a big economy to be a powerful country on the world stage, and so they invested in infrastructure. The Communist Party allowed massive different construction projects. Yes, a lot of bridges and railways and motorways, but more importantly, they focused on big cities. So apartment blocks started being built everywhere. Now, this was for the most part hugely successful. China became the quickest urbanizing country of all time. In the process, the property developers, the market, the industry as a whole became hugely wealthy, and loads of profit and wealth was generated. Now, of course, this process started off in the most desirable places first. Property developers would build 10 skyscrapers in a city center in a big place like Beijing, but then that city center would fill up, and so they'd go a little bit further out and they'd do the same. This happened over and over again across hundreds of different cities. As these cities grew, they drew new people in and new businesses, and loads of money was created. Property prices in these cities started to rise as well as people got wealthier, and so property development in China basically became the biggest individual property sector in the entire world, literally creating cities out of thin air with huge success. At the same time, we slowly learned that the Communist Party was actually being funded by this property industry and not by taxes. The government controls all of the land in China, literally all of it, and it leases out certain parts of it for around about 100 years to property developers when they want to build an apartment block. Of course, all of the money for purchasing this land or this lease goes to the government and not to businesses, as we'd see in more Western style economies. The Communist Party is to a large degree not funded by taxes, but funded by profit from the construction markets. Of course, the construction industry also just outright employs millions of people. More people work in construction in China alone than even exist in Canada, and so that generates loads of wealth for normal people too. Of course, businesses can make loads of profit off of this. Every apartment needs beds, chairs, tables, doors, and a myriad of other products, all of which are made in China. As these businesses grow, they get wealthier, they go public, and people invest, and they get wealthier further. Owners of these businesses become billionaires, and they spend loads of money on yachts and other discretionary products. It's safe to say then that the property market boom in China was absolutely stellar for their economy, and no one wanted that boom to end. The problem is, though, at some point it was going to end because China stopped needing so many homes, as it had already mostly urbanized. At this point in China, almost everyone who actually wants to live in a city lives in a city, and on top of that, their population is shrinking every year, not growing. The one-child policy absolutely killed their population growth, but China still wants a property market to boom. So what we saw was people in China stopping buying homes to live in, and they started to buy them as investments instead. Now, this of course isn't an exclusive phenomenon to China. It happens all over the world, but it's incredibly different the way it works in China. Because the local government literally owns all of the land in China, they can also literally sell 1,000 acres in a desert to a developer, tell them to build a city, and then the developers go and do that. The idea is, of course, that once this city is built, it will be so attractive to new residents that people will flood in, move into the city, and generate wealth there. But this is where the problems start to mount. China already has a massive overabundance of homes. Right now, there are, by some accounts, 65 million empty homes in China, which is enough to house every single person in France. They could all have their own individual house, and there would still be some left over on top of that. But of course, developers in China are still building millions more homes every year, despite the fact that no one wants to live in them, and literally no one can because there physically aren't enough people. Now, this process has started decades ago, but there was another aspect at play. In China, investing is actually very difficult. Buying stock in a company is awkward, and frankly, no one trusts company accounts or any of the reportings that they give because fraud is so rampant. There are other options, of course, like buying gold or precious metals, but some alternative assets like cryptocurrency are outright outlawed in China, which meant there was a massive gap left open for people who actually wanted to save their money. On the other hand, the Communist Party actively encouraged people to buy homes as investments, and so they did. People bought second, third, or even four homes, and they got to the point where men couldn't even get a girlfriend in China anymore if you don't at least own one piece of property. At first, people were simply buying investments in the best cities possible in Shanghai or Beijing, but property prices were already high there, and then they soared past the likes of New York and London. Put simply, people in China can't afford to buy homes in good cities anymore, so they moved to the smaller ones, but then the same thing happened to those cities too. This flood of demand caused prices to rise, and so people resorted to buying in even smaller cities once more. Eventually, it got to the point in China where the average person could only afford to buy an investment home in a random ghost city in the middle of a desert that was built by a developer hoping to squeeze some cash out of some ordinary Chinese citizens. This then brings us on to the absolutely insane problem with the Chinese property market, the ghost cities that litter the country. Now, these artificial cities were created at one singular point by developers in the hope that people would buy those apartments and move into the cities, and it would develop into a real self-sustaining economy. The problem was that these artificial cities had no demand from people wanting to live there, but they had plenty of demand from people wanting to invest there to play off the people who would supposedly live there in the future. It got to the point where about 100% of the homes bought in these towers were investments and not homes themselves. This led to this Chinese ghost city phenomenon. There are hundreds of them across the country, with buildings, motorways, train lines, stations, schools, and hospitals, but no people. There are literally no people. There is loads of documented footage of this, and frankly, it looks like an apocalypse movie scene. But all the property that's empty is owned by someone. It's owned by investors who live elsewhere in real cities. They've simply never visited their apartment. They bought it from a fancy brochure from a property developer who promised them it would be a thriving, bustling city and they'd make loads of money. But they lied. Developers knew this, so they started to cheap out. Why put doors on apartments? Why fit kitchens or floors or bathrooms when no one will actually live there or even see the apartment? They then started to take it even further. Why even put windows in when there's no one to protect from the wind or rain? Why put elevators in when there's no one to use them? It's now got to the point where most of these buildings don't even have staircases in. They are literally just concrete shells and nothing else. The crazy thing is, though, that every one of these apartments that you see are sold. They are owned by an investor. They've been sold off by the developer. That developer has made their money on an unsuspecting Chinese citizen who simply doesn't know what they own. There are massive cities full of this, hundreds of towers completely empty, hundreds of cities just like this, but all of the apartments in them are sold because investors just don't know any better, and where else are they to put their money? Of course, it obviously helps that the Chinese property market has been going up by about 10% every year for 3 decades now. Now, this is the fundamental problem with China's property bubble. It isn't based on use, but on magic. It's based on this concept called the greater fool theory, which refers to certain types of investments. Now, these investments provide no actual value on their own. Their sole purpose as an investment is to be sold on to someone else at a higher price than you bought it from, i.e., you're selling it to a greater fool than yourself. Most investments and legitimate investments simply don't work like this. If you buy a stock in a company that pays a dividend, then you are buying part of those factories, those offices, and those personnel who make revenue and profit, and they pay some of that money out to you. There's a return there. If you buy some farmland, you can farm that land yourself and sell the product, or rent it out to someone who can farm it and they make a profit. Again, there is a return there. In the West, in the UK, for example, if you buy a property, you can rent the house out to the family who want to live there. They pay you rent and you get a return. Or if it's an office building, you rent it out to a business which generates revenue using that facility. In both instances, you get a return. For real investments, you can get a return not just from selling that investment, but in China, in the Chinese property market, that is simply not the case. These ghost cities are empty because no one wants to live in them. If you own one of these concrete shell apartments, you can only make money if you sell it on to a greater fool. No one wants to live there, so you simply can't rent it out. And even if people did want to live there, well, frankly, they can't because, again, they're just concrete shells. To make matters worse, this doesn't even just apply to the rental market for property. In the West, for example, in the UK, most homes are sold to people who actually want to live in them. 19% of homes are rented, for example, while the rest are lived in by their owners. Because rental homes and normal homes are all in the same areas, even if a financial crash happens, the demand for these homes will never disappear completely because people simply want to live in them. Even if every single investor in the UK goes bankrupt, normal people will still want to buy those homes, and this means that the housing market crash in the West, while it can be catastrophic and really bad like 2008, will never be a total collapse. In China, in these ghost cities in particular, that is simply not the case. 100% of the demand for these apartments is from investors, and because investors can only get a return when property prices rise, when prices start to fall, that demand disappears totally. China's property market can see total collapse where others can't. Investors are happy to buy into Ponzi schemes when they're on the way up, but the second they start to fall, all the buyers disappear instantly. We are watching China's property market fall right now, and simply put, there is no stopping it. But to be honest, this has actually been how the Chinese property market works for decades, so why is it crashing now? This article behind me is from Forbes from 2011, 11 years ago, talking about this Chinese property market bubble. Well, the reason it's finally falling now, of course, starts with the Communist Party, as all bad things in China do. The government realized that they were seeing a property bubble and it was going to keep getting worse. That means that when it did finally pop, the later that pop comes, the worse the results. So they decided to try and rein the bubble in slowly. Of course, we do now know that they failed in that endeavor because they caused a crash, not a slow reduction. They put into place the 3 red lines policy, and the details of that policy really aren't too important. What is important though is what it did. It made it harder for property developers to take out debt. And debt from property developers had financed every single apartment and ghost city in China to this date. No new debt meant no new developments, and so construction slowed down massively. But there was a fundamental problem here. Debt has been used by property developers to finance their construction for decades now, and because the property market was always going up, these developers never sought to actually pay off their principal loans. Instead, they just took out new loans and built more apartments, and why wouldn't they? Because housing prices were only going up. This sector became the most indebted sector in the world, with trillions of dollars of liabilities across 100 different developers. Suddenly, none of them could take out more debt to repay their old debt, so they all had to start selling off their assets instead. At first, they sold their finished apartments maybe for a slight discount, but problems started to emerge. The developers' assets that they held, these apartments, these homes, they simply weren't worth enough to actually pay off their debts, so they started to default. This made international news last year when Evergrande started to default, in particular, the second largest property developer in the world. But this was actually happening for about 6 months prior to that with smaller firms across China. Chinese citizens saw this all happening firsthand. Loads of them had put 100% deposits down on apartments that weren't being finished because developers had no money. The Chinese people realized what was happening, the market was about to crash, and so demand for these Ponzi scheme-esque homes disappeared overnight, and then this caused that crash. Suddenly, an apartment worth $100,000 one day was worth less than $50,000 the next. This made it literally impossible for these property developers to pay off their debt because their asset prices had absolutely dropped. As a result of this, housing prices have been falling across the entire country of China, every single city, by more than 1% every single month over the last year. In certain places, that effect is far, far worse. In ghost cities, some prices are down at 10% compared to where they used to be, whereas in major cities like Shanghai and Beijing, the drop has been markedly smaller because there's real underlying demand for those properties. The worst thing about all this, though, is that this affects every single property developer, no matter how responsible they were, because the entire property market is dropping like a stone. About a month ago now, we got news of Country Garden, a Chinese property developer, defaulting on their debt. Now, Country Garden is not only the biggest property developer in China, but actually the biggest one in the entire world. It was seen also as a blue chip company, safe and secure, like the Apple of the housing industry. If you wanted the most reliable, the most safe investment in China, you bought one of their apartments or one of their investment products. The problem is though, its profits have fallen by 96% over the last year, and it simply cannot pay its debt anymore, and so even it now is collapsing. There is no safe haven here either. The list of dying property developers in China is too many to count, and it's still growing by the day. The total amount of wealth lost here will be in the trillions, and it's not even just the property market that's now crashing. This industry employs tens of millions of people who suddenly have no jobs, and it makes up around 70% of all savings and investments in China. When the property market crashes, everything else will crash as well. We are seeing banks default and collapse and go out of business. Train and railway companies are collapsing too, shipping companies and tech companies as well. China's entire economy is about to enter perhaps the worst recession in its entire history. And it's all because of a property market bubble that was propagated by the Communist Party.